The markets are closed, but the business stories are just heating up. Hello, I'm Robert Tan. Catch up with us on Business Brief. Asian shares were mostly higher on Wednesday. This as cautious sense of relief spread through regional markets after the United States and China agreed to pause their trade war for 90 days. Taiwan's TAIEX, Hong Kong's Hang Seng, and Indonesia's JKSE gained nearly 2%. South Korea's KOSPI advanced more than 1%. India's Nifty gained 0.61%, and Australia's ASX 200 was flat with a slight uptick. Japan's Nikkei 225 was the only major index to decline, slipping 0.26%. In the currency markets, the US dollar weakened against the Japanese yen, falling 0.36%. Meanwhile, it rose slightly against the Hong Kong dollar, up 0.10%, and also edged by nearly 0.1% versus the Australian dollar. The greenback is flat with an upward bias against the Singapore dollar and unchanged against the South Korean won. The US dollar also strengthened 0.17% against the Thai baht. Commodity and crypto markets were mostly lower. Gold slipped 0.60%, while oil prices also declined with West Texas Intermediate crude. The US benchmark fell 0.49% and Brent crude dropped 0.53%. In contrast, Dubai crude bucked the trend, rising nearly 2%. In the crypto market, Bitcoin declined 0.96% and Ethereum eased 0.54%. China announces it will reduce additional tariffs on U.S. imports from 34% to just 10% for a 90-day period starting Wednesday. The move comes after high-level trade talks between the world's two largest economies held in Switzerland over the weekend. China's Customs Tariff Commission says the adjustment complies with domestic laws, including its tariff, customs, and foreign trade policies, as well as key principles of international law. It also says the reduction reflects the shared interests of producers and consumers in both countries. The temporary truce between China and the U.S. could ease global trade tensions and stabilize supply chains, a positive signal for emerging markets like the Philippines. Lower tariffs could reduce the cost of imported inputs, open up new trade flows, and improve sentiment in export-driven sectors. But analysts warn the 90-day window is short and uncertainty remains high ahead of the next round of talks. U.S. President Donald Trump announced his plans to lift sanctions on Syria, a move with far-reaching implications for global trade and geopolitical alignments. The announcement came during his Middle East tour, which began in Saudi Arabia, where Trump said he was responding to a request from Saudi Crown Prince Mohammed bin Salman. In return, a massive deal, $600 billion in Saudi investments committed to the United States and a $142 billion arms package. The lifting of sanctions marks a major shift for war-torn Syria, which has been subject to heavy U.S. economic restrictions since 2011 over civil war violence and human rights abuses. With the collapse of Syria's previous regime in December 2024, U.S. officials now see an opening for reintegration into global markets. The move could revive Syria's energy sector, spur infrastructure rebuilding, and reopen trade routes critical to the region, with potential ripple effects for global oil, logistics, and defense contracting. Trump says it's time for Syria to, quote, move forward.
And I'm very pleased to announce that Secretary Marco Rubio will be meeting with the new Syrian foreign minister in Turkey later this week. And very importantly, after discussing the situation in Syria with the Crown Prince, your Crown Prince, and also with President Erdogan of Turkey, who called me the other day and asked for a very similar thing, among others, and friends of mine, people that I have a lot of respect for in the Middle East, I will be ordering the cessation of sanctions against Syria in order to give them a chance at greatness.
The Trump administration signed several new strategic agreements with Saudi Arabia during President Donald Trump's visit to the kingdom. The deals could pave the way for closer military and economic cooperation between the two countries. Speaking at a regional investments forum in Riyadh, Trump praised Middle Eastern leaders, signaling a reset in U.S. relations across the Gulf. According to Saudi state media, the agreements cover key sectors, including energy, defense, mining, and infrastructure. The White House says Saudi Arabia is set to invest $600 billion in the U.S., including a massive $142 billion defense package. Trump is expected to meet with Syrian President Ahmad al-Shara in Riyadh before he heads to Qatar in the United Arab Emirates, part of his first major international trip since beginning his second term. He is joined by a delegation of U.S. business leaders, including Tesla CEO Elon Musk.
With this trip, we're adding over $1 trillion more in terms of investment into our country and buying our products. And, you know, nobody makes military equipment like us. We have the best military equipment, the best missiles, the best rockets, the best everything. Best submarines, by the way, but it's going to go a lot higher. You see, we've never had anything like this happen. It's an explosion of investment and jobs, and great companies are coming in. Never seen anything like it. There's no better place to make a future or make a fortune.
The high-profile deals could redefine U.S. strategic and commercial ties in the Gulf, with wide-ranging implications for energy markets, defense supply chains, and global trade. The Los Angeles port, USA's busiest, fell eerily silent Tuesday. LA Port Executive Director Gene Seroka says it is a preview of a 35% drop in Asian cargo expected this week. Rising U.S.-China trade tensions caused shipments from China to remain low until the parties agree to a framework and sign a trade deal. With Los Angeles and Long Beach handling the bulk of Chinese imports, the country's supply chain must brace for impact. Japanese automaker Nissan posts an 88% drop in operating profit for its last fiscal year, earning just $472 million amid slumping global sales. In a bid to stay competitive, the company is launching a major restructuring plan that includes 11,000 job cuts and a slowdown in vehicle production. Nissan's troubles reflect wider headwinds across the global auto industry, from weak demand in the U.S. and China to the collapse of its planned merger with Honda. The company is also grappling with U.S. trade tariffs and mounting competition from China's fast-rising electric vehicle makers, a shift that could reshape supply chains worldwide, including in Southeast Asia. For the Philippines, where Nissan operates manufacturing and distribution facilities, industry players are watching closely for potential impact on jobs, parts suppliers, and trade ties. New CEO Ivan Espinosa now faces the challenge of reversing Nissan's decline and repositioning it for the new auto landscape. Meantime, Japan's Honda Motor expects a 70% drop in net profit for fiscal year 2025 to 2026 as U.S. trade tariffs continue to disrupt global operations. The company is now projecting just $1.7 billion in net profit over the next year, sharply down from $5.7 billion previously. Honda says the tariffs combined with post-pandemic recovery costs could cut into earnings by as much as $3 billion. For the Philippines, this raises concerns over possible spillover effects on auto parts exports, logistics providers, and regional supply chains, particularly as Honda has a long history of assembly operations and sales in the country. Analysts note Honda may be in a stronger position than some of its peers, with over 60% of its U.S. sales locally produced, buffering it from the full brunt of import duties. Still, the company has put its EV supply chain project in Canada on hold for 2 years, citing weakening demand in the electric vehicle market. This slowdown could also influence EV strategies across Southeast Asia, including the Philippines, where the market is still in its early stages of transition. We're taking a short break. The biggest business stories from around the country are up next. You're watching Business Brief. BPI Securities goes digital to tap Gen Z and millennial market movers. We have Sujin Kim in Makati City for the details.
Robert, the Bank of the Philippine Islands, through its brokerage arm BPI Securities, is releasing an upgraded online trading platform aimed at capitalizing on the rising participation of Gen Z and millennial investors in the Philippine stock market. With more Filipinos embracing digital channels for financial services, BPI Trade introduces a web and mobile platform that offers real-time market data. The launch comes amid a structural shift in the country's investing landscape, where younger, tech-savvy individuals are increasingly turning to digital tools for long-term wealth creation. BPI Securities currently serves nearly 100,000 clients, a user base that skews heavily towards millennials and Gen X. With the introduction of a more intuitive and mobile responsive interface, the firm is targeting to triple this figure to 300,000 users over the next 2 to 3 years. One of the platform's most significant innovations is its fully digital account opening process, allowing users to open a trading account end-to-end online, with no minimum initial investment required. This feature is expected to lower barriers to entry and attract a broader segment of the retail market. The platform was engineered with a flexible layout system that caters to different investor profiles, whether technical traders seeking interactive charting tools, value investors looking for fundamental research, or casual users who simply want a snapshot of their portfolio and earnings. Beyond functionality, security remains a core selling point. As a subsidiary of one of the Philippines' most established banks, BPI Trade offers clients the backing of a financially sound, highly regulated institution, a significant differentiator in a crowded brokerage market. The new platform will be available to the public starting May 28, with a phased rollout that includes additional features in the pipeline. These include conditional orders like stop loss and profit-taking triggers, e-deposit capabilities, and mutual fund integration as part of BPI's long-term roadmap to support multi-asset investing. While trading is currently limited to local equities via the Philippine Stock Exchange, BPI Securities has signaled interest in eventually expanding to foreign markets as part of its broader digital transformation agenda. And those are latest updates from Makati City. Back to you, Robert.
Thank you for that report, Sujin Kim. Meanwhile, the Anti-Money Laundering Council is tracking how 200 million pesos allegedly morphed into crypto assets. The amount was the ransom paid for kidnapped businessman Anson Ke. Authorities suspect junket groups Nine Dynasty and White Horse Club used casino e-wallets and shell accounts to launder the money. Unlicensed crypto operations are now under scrutiny for potential violations across borders. AMLAC says it is working with PNP, PAGCOR, BSP, SEC, and foreign agencies to follow the funds and hold all players accountable. The Department of Agriculture is set to lift the maximum suggested retail price policy for pork products. This is due to low compliance among retailers. The Undersecretary for Livestock, Constante Palabrica, says the lifting of the MSRP for pork will be announced within 24 hours. But the official clarifies they could bring it back once they know how to improve its implementation. Retailers said it was difficult to comply with the MSRP due to expenses for biosecurity amid threats of illness such as the African swine flu. Bilyonaryo and Go Negosyo founder Joey Concepcion lost the Marcos administration for making the recent midterm election one of the most efficient. Concepcion tells Bilyonaryo news channel Straight Talks the midterm polls were generally peaceful. He is confident the new batch of members of Congress will make laws that are relevant to the times.
Well, yeah, you can see that the people have spoken, and I think it was a very good election. You see both Bam and Kiko making it into the magic list, no? And that's where we have real democracy. And I'm sure that our country will really move forward. We have to have good legislators who will legislate laws that are applicable to the current time that we have today.
Go Negosyo is also preparing for the ASEAN Summit in 2026, which will be hosted by the country. Concepcion underscores the significance of the event for the Philippines, as the last time the country hosted it was in 2017 during the Duterte administration. Concepcion is the chairman of the ASEAN Business Advisory Council.
Now, I want our Filipino people to understand when we host the ASEAN, this is not going to be just for the big business. we want it to be inclusive, and that's what we're preparing on. No? So yes, you will have big business in the ASEAN events next year, but we want to see also MSMEs participating in the ASEAN events next year, not only from the Philippines, but from the 9 other countries. And this is, we're putting a big team behind it because this is going to be a lot of work. It will be one of the biggest, or I would say the biggest event that the president would host before his term ends. And this is why we have to really make it successful.
New dynamics await the Senate following the midterm elections. The surprise comeback of former Senators Bam Aquino and Kiko Pangilinan signals a shift in the upper chamber, bringing back familiar opposition voices. But the Duterte bloc remains intact with key allies Bongo, Bato de la Rosa, Rodante Marcoleta, and Aimee Marcos retaining or regaining their seats. If Camille Villar, now in the top 12, sides with the Dutertes, it could prevent the Senate from securing the 2/3 vote needed for an impeachment to push through. While the new composition doesn't guarantee legislative blocks, just yet it offers a first glimpse into the alignments that could shape the 2028 presidential race. And we're taking a short break. Business Brief will be right back. The Philippines now ranks 117th in the latest Human Development Index, or HDI, released by the United Nations Development Program, or UNDP. In the 2023 report, the Philippines scored 0.72, slightly up from 0.71 in 2022. This places the country in the high human development category, but still below the regional average for East Asia and the Pacific. The HDI tracks progress in 3 core areas: health, education, and standard of living. For policymakers and the business sector, the ranking highlights urgent gaps in social investments as well as opportunities to improve long-term economic competitiveness. It also raises questions about how effectively growth translates into real quality of life for Filipinos. And net flows of foreign direct investments into the Philippines fall sharply in February, dropping to just over $500 million. Data from the Bangko Sentral ng Pilipinas shows FDI inflows sank to $556 million, down more than 61% from $1.39 billion in the same month last year. The BSP cites high base effects from last year's surge as a major factor behind the decline. But economists like RCBC's Michael Ricafort also points to growing global uncertainty, including President Donald Trump's reciprocal tariffs and protectionist policies. Ricafort says these shifts may be prompting multinationals to relocate investments back to the U.S. to avoid future trade barriers. The drop underscores a challenge for emerging markets like the Philippines as they navigate a more fragmented, risk-aware investment landscape. The Philippine Chamber of Commerce and Industry, or PCCI, urges the new Congress to prioritize key economic reforms following the midterm elections. PCCI says these measures are essential to improving competitiveness and sustaining business growth. Top on their list, a new Magna Carta for micro, small, and medium enterprises to extend the mandatory loan allocation for small businesses. The group also wants to lift Bangko Sentral's regulatory cover on SB Corporation to enable more flexible, innovative lending for MSMEs. They're also backing the passage of the International Maritime Trade Competitiveness Act, aimed at making shipping charges more reasonable, transparent, and in line with global standards. The government's borrowing costs dropped last Tuesday as yields on short-term debt fell across the board. Data from the Bureau of the Treasury shows that yields on the 91, 182, and 364-day Treasury bills declined to 5.55%, 5.65%, and 5.66% respectively, lower than last week's average rates. RCBC Chief Economist Michael Ricafort attributes the decline to dovish signals from local monetary authorities, who are now open to as much as 75 basis points of additional rate cuts for the rest of 2025. This comes after the country's inflation rate dropped to 1.4% its lowest level since 2019. The government is considering seasonal tariffs on rice imports to help protect farmers' income during peak harvest months. Economic Planning Secretary Arsenio Balisacan says the move could stabilize farm gate prices by adjusting import duties based on the time of the year. The proposal follows last year's tariff cut from 35 to 15%, aimed at lowering rice prices for consumers. Data from the Philippine Statistics Authority shows that as of April, the average price of regular milled rice was 44 pesos and 45 centavos per kilo, down 13.3% year-on-year. The plan is now under review by the Committee on Tariff and Related Matters and could be elevated to top economic managers for approval. If implemented, the measures could balance affordable rice for consumers with a stronger safety net for farmers, a key issue ahead of the next planting cycle. And Meralco cuts power rates this May, lowering the overall electricity rate by 74 centavos to 12 pesos and 26 centavos per kilowatt hour. This translates to savings of around 150 pesos for households consuming 200 kilowatt hours per month. The drop is mainly driven by lower generation and transmission charges, particularly from cheaper power sourced through the wholesale electricity spot market and independent power producers. Generation charges alone dropped by 31 centavos per kilowatt hour. Meanwhile, Meralco says it maintains stable electricity supply during the midterm elections thanks to advanced preparations and the deployment of rapid response teams. Philippine shares bounces back to the negative territory after the midterm elections. The PSE index ended lower by 0.2% to close at 65.51, finishing the day as the third worst performer in Asia. Majority of the day's sectoral indices ended in the red, with holding firms falling the most at more than 1%. Decliners outpaced advancers 114 to 82. Total value turnover reached 9.5 billion pesos. More than a half of the day's most active stocks ended in the green, with Aboitiz Equity Ventures rising the most at nearly 10%. Meanwhile, at the foreign exchange market, the peso is currently trading at 55.74 against the greenback, strengthening from previous close of 55.80. And that's a wrap for today's Business Brief. I'm Robert Chan. Join us again tomorrow as we bring you the stories that help you plan your next big, bold moves in business. Only here on the Bilyonaryo News Channel. See you then.